Well, good afternoon, ladies and gentlemen. Of course, I want to say good afternoon to those of you who are joining me here on the East Coast, the United States, of course. And I want to say good morning to those of you who are joining us from the Central time zones, the Mountain time zones, or the Pacific time zones. And of course, we also want to say good evening. If any of you are joining us from across the pond in parts of UK or parts of Europe, good early morning if you're joining us from parts of Australia or in Asia. Welcome to today's presentation. Today we're going to discuss using the Power Options search tool to find new options trades. We're going to walk through some of the criteria that I use in my given strategies and how easy it is to set up a basic search in the strategies that apply to you. Now, we also want to just review very quickly, what is Power Options as a whole? Well, Power Options is a patented suite of search and analysis tools designed for self-directed options investors. Our tools will allow you to search across the universe of options in less than a second to identify only those positions that match your personal risk-reward tolerance. You can also search individually by symbol in a given strategy, or view various strategies against a certain symbol to see which risk-reward profile best suits your investing needs. Once you've identified those positions, we have links to help you quickly further research and analyze the stock or the option, and we do offer a powerful set of portfolio tools to help you paper trade, track, and manage your positions. In addition to that, we do, of course, offer countless educational articles, help pages, flash tutorials to help you get more familiar with the tools on the site, and archived webinars that showcase the tools and discuss the various option strategies, things to look out for, and things that might help you to be more successful with the various option strategies you're applying in your account. Ernie Zerena created the Power Options tools over 17 years ago, but everyone here at Power Options uses these tools to trade their own personal accounts, myself included, so we have many more years of combined trading experience. And for those of you who don't know me, my name is Mike Chupka. I'm the Director of Education here at Power Options. I've had the great pleasure of working with Ernie Zerena and the Power Options staff for the past 11 years, actually. I handle a lot of the coaching sessions, so those of you that are current subscribers or trial members to Power Options, you can sign up for one of those free coaching sessions at any time. It's essentially a 45 to 50-minute phone conversation. We'll walk you through the tools on the site, answer any questions that you have about investing and about applying the tools to find new trades and, of course, manage and track your positions as well. I have co-authored 2 books on investing with Ernie, and I am versed in all strategies on Power Options. We support over 23 of the most commonly used option strategies. However, I always want to be upfront. There are certain strategies I've never traded in my personal account, things such as naked calls, selling a short call without the protection of the stock or an extra long call there, short straddles and short strangles, as well as iron butterflies. Those positions just don't match my risk-reward tolerance, but at the end of the presentation, if you have questions about those strategies, I'll be more than happy to help you out with those. Now, what we're going to discuss today, we're going to discuss searching for one symbol at a time, and then we're going to talk directly to the search tool and evaluating the different criteria that you can use, and of course what criteria might work best in some of the strategies that you're looking to trade. We're going to evaluate some of the stock and option criteria, and we're also going to discuss how to create a basic search for specific needs or specific securities. And of course, general tips throughout the entire process of what we might want to look for using the search tools to help you maximize your options research and option searching as well. Well, all that being said, I want to navigate over to the Power Options suite of tools we're out to cover today. And what we're looking at here is basically the trial account for Power Options. And of course, those of you that are just getting started on your 14-day free trial, you want to make sure that you follow these 4 steps to access the Quick Start Guide. You can view a variety of the free flash tutorials. We do host a variety of free live webinars during the week, and of course you can register for one of those coaching sessions at any time. Now, the Power Options tools are designed by a tab navigation system. So we start off with the main home tab. This is where you can access that free coaching session, the variety of tutorials, and access the webinar archive page through the Learning Center. You can follow along with the blog as well or make any changes that you need to under the My Account tool. The Portfolio tab, this is always locked in place as well. This is where we track our open positions, can view our historical trades, see where our positions stand based on the historical trades and our current open trades as well. And then the Signature Tools tab is also always locked in place. And here you'll find tools to help you further research and analyze individual stocks or positions that you might be in. The Volatility Skew tool, the market sentiment tool. This is based on 13 broad-based indicators of the market. We've set fences on those based on a 5 to 7 year history, so we can see whether we're in basically a bullish, bearish, or neutral market based on those 13 broad-based indicators. For those of you doing spread positions, we do offer a spread chain tool. We might take a look at that a little bit later on as well. This allows you to evaluate vertical spreads, credit, debit spreads, or parity trades using midpoint pricing, one stock at a time. For those of you buying calls and buying puts, the long option finder, very powerful tool. Just put in your stock symbol, your expectation of the stock, and your target date, and it'll show you which calls or which puts would give you the theoretical return. And the stock repair tool, if you have a stock that's fallen in price, the stock repair tool will show you potential ratio call spreads that might help you get back to break even faster. And of course, there's also a stock insurance tool. So if you have a stock that's fallen, you have a stock that's up in price, you can evaluate potential collar spreads or put options that you can use to lock in some of your unrealized gain and still leave your upside open as well. But of course, we're going to focus today on the search tool. So as you see next to that, we have a variety of different tabs selected, the various strategies. As I mentioned, we do support over 23 different strategies. And we may only see 5 or 6 here on the main tab. Now, Donald says that the audio is breaking up. Is everyone able to hear me okay and on a relatively consistent basis? Just let me know using the question pod there if you're hearing the audio okay. I'm not getting any notification from the GoToMeeting, GoToWebinar technology that the sound is breaking up. Scott says it's good. Gunther says very clear. Jack says it's good. Okay, thank you, gentlemen. I appreciate that. Okay, so when you log on to your account, if you don't see a strategy that you're interested in trading, simply click the Other Strategies tab, and we can pick and choose which strategies we want to see. All right, now for right now, to hear the rest of our presentation, I'm just going to launch one poll today. And what I'd like to know, for those of you in attendance, what types of option strategies are you trading or researching mainly right now? Mainly looking at covered calls and the parity trade, naked puts. Are you looking at some of the protective option strategies, married puts, collars, the radioactive trading techniques, for example? Are you focusing on vertical spreads, bear call credits, bull put credits, debit spreads, or even iron condors? Are you looking at long calls and long puts, option buying, speculating on a market movement, or maybe buying options on ETFs and indexes? Or are you focusing on the time spreads, diagonal spreads, calendar spreads, and so forth? Just let me know which strategies you're mainly researching right now. Okay. All right, so we've had the poll open for about 50 seconds. I'm going to leave it open for another 10 seconds there. Allow everyone a chance to vote. Okay. I'll count it down here. Leave it open for another 5 seconds. 4, 3, 2, and 1. Let's go ahead and close that. Oh, we've got some more votes coming in. I'll leave it open for a second. All right, let's go ahead and close that. We had a tie, and now we have a clear winner. Let me share that with everyone. 50% of you are doing the vertical spreads and iron condors. Fantastic. In second place, 50% of you are focusing on covered calls and naked puts. And then we have a three-way tie for third, 35% doing the protective option strategies, long calls, and the time spreads. Okay, fantastic. Let's go ahead and hide that. And let's analyze our screen now based on your answers. So I already have iron condor. I have a lot of the strategies selected, but I have iron condor there. Let's move bear call credit and bull put credit. I'm just going to use the arrow keys, move those up to the top. Okay, covered calls and naked puts, well, we've got those in there as well. Well, let's go ahead and remove bear call for the time being. Let's just limit this. I'm going to remove that out. Let's move covered call and naked put up to the top as well. And we've got collars in there, so we can move that up. We can add married puts, and we got the calendar spreads. But we do need to add long calls or long puts as well. Let's remove calendar put. So let's add married puts in for our protective option strategies. So we'll just select it from our available menus, click Add to Menu. We've got calendar calls, but let's go ahead and add long calls as well. We'll click Add to Menu, and then let's save the configuration. All right, so now we see our selected strategies are on top, iron condor, bull put credit, covered call, and so forth down the line. Let's see here. Okay, so about that, folks. Now, there's two ways, of course, that we can mainly identify new positions. And the first way is, well, you might already know of the stock symbol that you're researching, whether you read about it in the news, a friend or a colleague suggested a stock that's been working well for them, or a strategy that's been working well for them. Or the second way, of course, is we're not sure which stock we want to use, but we know in a given strategy we want to look for certain things based on the structure of the trade and the sentiment, the market sentiment of the trade as well. Now let's take the first example. For iron condors, bull put credits, bear call credits, when you click on the strategy, of course, you're navigating to the main home tab for that particular strategy. You see a basic profit and loss chart over on the right-hand side. You'll have some overview for the given strategy, a description of each of the tools, but you can quickly navigate to the tools using the submenus. And then you'll also have a learning center in each one. The learning center for each main strategy tab will consist of white papers for the particular strategy or archived webinars as well. So we see we have a couple white papers here, links to white papers for the Iron Condor, and then a 4-part series for Iron Condor's archived webinars. Now, for Iron Condors and the credit spreads, first thing we may want to do is just use the search by symbol tool. It's a simple tool to use. We're just going to be prompted to put in our stock symbol. As an example, let's put in Apple. Maybe not something I'd use as an Iron Condor position right now with some of the news that came out. But we'll just use this for a base example. And you can select your different expiration months. We can choose to look at weeklies if you wanted to use weekly options for your different spread trades or Iron Condors, or you can choose a standard expiration month. I guess September right now, the standard expiration would be considered a weekly. Let's just select September, and we can choose basic filters for less, more, all results. It's a pretty simple tool to use, but to be honest with you, we're showing you the details of what might interest you. You've got the basic setup here for the options you're buying, options you're selling, your upper and lower break even, the total net credit, the total return, and the probability. Okay. Well, in both the search and the search by symbol tool, we have a choose columns button up at the top, and you can select the choose columns button there to customize your data field view as well. But to be honest with you, if I'm doing some Iron Condors here, I don't know if I'd trade any of these, the first 20 or 30 that are listed, right? It's a long list that we have available here, all the potential trades. We did more results, not even the all results. But let's look at some of these positions. Some of these Iron Condors have a great probability between, the theoretical probability that the stock would be trading between your short put and your short call strike price, so all 4 options would expire worthless and you keep the net credit. But the total net credit is only 2 cents or a 0.3% return. That's good probability, maybe not the return we're looking for. It's 10 days to expiration. So maybe if I'm building Iron Condors, I want to make sure that I'm receiving, close to maybe 50 cents or so, or 25 cents on each side of the spread, and I have a good probability on the bull put or the bear call. So although the search by symbol tool is useful and easy to use, now Jack lost the audio, and I'm not sure why that's happening. Usually I get a signal that tells me the audio is dissipating here from the GoToMeeting platform, but I'm not seeing that. We are recording this presentation, of course, so hopefully the audio is more consistent in the recording for those of you that are having a little difficulty. Donald and Jack there having a little difficulty with the sound there. All right, so let's just, now back says Jack. Good, good. All right, so a better tool to use for identifying vertical spreads and identifying maybe even Iron Condors is the spread chain tool. Now there's 2 ways we can access the spread chain. I can type my stock symbol up into the main entry field box and just click on spread chain, or under the vertical spreads we can navigate right to spread chain as well. Let's take a look at the spread chain. The advantage that the spread chain gives us, as opposed to the search by symbol tool, is we can put in specific criteria for some of the basics we might want to see on a vertical spread or combine to look at an Iron Condor. For example, we can put in our spread width limitation, we can select our specific expiration date, we can put in our minimum net credit that we'd want to see on both sides of the spread. The Iron Condor is a combination of a bear call or bull put. Our range out of the money, minimum return, and probability above for the bear call. I apologize. Probability below for the bear call, probability above for the bull put. So even though this is looking at vertical spreads, let's say I wanted to create an Iron Condor combination, and I wanted to look out to September 10th. I'm sorry, September 20th, 10 days away, the standard expiration, but we'll consider this a weekly at this time. Well, I'm going to plug in my symbol. And let's do a minimum spread width. I believe Apple does have dollar strike spread differences, so maybe I want to be a little bit wider. Let's try a $2 spread difference for the standard expiration and see if anything comes up. Now the minimum net credit, this will be for both sides, okay, not combined, right, because it's just looking right now, we're in this credit spread view, so we want to see bear calls and bull puts. So if I want at least a minimum 50-cent net credit, I'm going to put in 25 cents here. Range out of the money for a weekly, let's start with 1%. Minimum return, let's knock that down to 3%. But I do want to keep a 75% probability that the stock will stay below the bear call or above the bull put. Let's submit that, see if we get anything. Unfortunately, we only got one bull put credit spread. So this shows me the 96.94 bull put credit spread. Right, where we'd consist of, well, let me change that color real quick. It's always defaults to the pink color here. I prefer to use the green. All right, so we have a 90. We'd be selling the 96 bull put and buying the 94. Using the midpoint prices, we'd get 50 cents for selling the 96 put and 24 cents for buying the 94. So that gives us a net credit spread of 26 cents with the midpoint, or 14.9% return. We don't have a bear call with it, so I'm going to have to loosen a little bit of my criteria. Let's drop this down to 20 cents. And let's put our probability down to 70. I'm going to keep the return at 3. That should be reasonable. Let's go ahead and see what we get. Okay, so now we see two spreads that were close. Okay, and the first one is probably the best one. All right, so over here on the left, I've got my bear call. Bear call combination, selling the 102 call and buying the 104 would give us a 33-cent credit. Why didn't that appear in our first result? It's because the probability is only 74.5%. But that's close enough to the 75%, although I could get close to 23 cents in the midpoint pricing and 26. That would put me at a 49-cent net credit using the 103, 105. So we could do our iron condor with the 96.94 and the 103, 105, or the 96.94 and the 102, 104 as well. So this not only gives you a good vertical spread view, but it also gives you a way to combine iron condors, evaluate them one stock at a time using your specific requirements for minimum net credit on each spread, range out of the money, and probability. Now let's say you did have a particular market sentiment on Apple. Let's say that I'm bearish on Apple based on the news that came out, the little foible that the stock had the other day. It dropped down from, what, 104, I think it was, down to about where it is today, at about 99, 98, and then it's back up $1.36. Or perhaps maybe I think that that was an overreaction and the stock is still bullish. Okay, so if I was thinking about doing bull put spreads, instead of looking at the credit spread view, I'd want to take a look at this other tab here, the put credit and call debit parity. Now I'm going to change my criteria. The criteria here with a 5-point spread width, 45-cent net credit. That was based on a previous screen that I used, so it saves it automatically for me. But I'm using a little bit of weeklies now, and I want to keep that $2 spread. So again, we'll look for a bull put, look for a minimum 25-cent net credit. Minimum return, let's lower that to 3% to allow for the weekly lower premium, but I still want to keep that 75% probability. Let's submit this. Okay, so we've got our 96.94. We should have expected to see that because that's the only one that came up the last time we used that same criteria. But what are we looking at here? We're looking at a parity trade. Remember on our bull put credit spread, we were going to sell the 96 just out of the money put and buy the 94. Using the midpoint, we get a 26-cent net credit on a 2-point risk. So this resulted in a 3.4% return, 14.9% annualized return. I'm sorry, 3.4% out of the money. A 14.9% return. Let's clear that up. With 545% annualized return, and we have an 80.4% probability. The bull put credit spread, of course, is a parity trade to the bull call debit, where if I sold an in-the-money 96 call and bought the deeper in-the-money 94, I'd have to pay a debit of 172. But if the stock stays above 96, as is my expectation with the bull put, if I'm bullish on this position, if it stays above 96, well, I can close the spread out at expiration, get close to the $2 back. So my debit's 172, which means if I get the full $2 back at expiration, if the stock stays above 96, we'd get $2 back for a 28-cent profit on a risk of 172 as opposed to a 26-cent profit on the bull put credit spread, which would be a risk of 174. So it's only 2 cents, but of course the parity trade here means that similar risk-reward profile. If the stock stays above 96, I have the maximum profit. If it drops below 94, I have the maximum risk. But here we're seeing a slightly higher return on our investment using the debit spread as opposed to the credit spread. Now, to be honest with you, if you're only trading 4 or 5 contracts of this particular spread in this case with these kind of numbers, the credit spread is probably going to work better. Because remember, you have to pay the extra debit. I'm sorry, you have to pay an extra commission to close the debit spread at the end. So that would be probably take away from this extra 2 cents in profit we're getting times 5 contracts would be 10 cents or $10. That extra commission might wipe that out, so it still might be worth it just to stay with the bull put credit spread. But if you're doing a larger contract size, the debit spread, the parity view here on the spread trade, the debit spread in this case gives us a better bang for our buck. All right, so those are the tools if I'm looking for positions one stock at a time with spreads. You do have a search by symbol tool, but the spread chain is probably a better way to go. For covered calls and naked puts, we do have some basic tools that you can use for covered calls, such as the quick find tool. There's also a search by symbol tool, but this is a holdover of an old tool we had called the one strike tool. Just as you one strike in and one strike out of the money, that's doesn't give you enough variation. So very quickly, I'm going to go through the rest of our strategies, and I want to jump into the search tool as well. So for covered calls, I'm going to recommend for covered calls and naked puts, I'm going to recommend that you use the option chain. Oh, sorry, question came in from Alan. Alan asks, can I add columns to the spread chain display? Not right now. We may look at that and enhance that in the future, Alan, but right now those default columns that we have there in the spread chain are the only ones that are available. Now, the reason why I suggest using the option chain for a covered call, let's stick with Apple as our example for today. Let's just go to Get Chain here. This is showing me the 5-strike spread, 5-strike call chain, or small chain, I should say, for our positions. And it shows us the 2 days out in time and the 10 days out in time as well. Let's go ahead and look at the 10 days out. We'll just change our expiration to September 20th. It is the standard expiration, but let's consider it a weekly once more. The reason I prefer to use the option chain when evaluating covered calls or naked puts is, number one, again, you can choose your columns to customize the field view here in the chain as we can with the search by symbol in the main search tool. But our chain, the Power Options chain, shows you the return criteria that would be most important to you as a covered call trader if you entered any of these as a covered call. For example, if I went out today and bought Apple at $99.35 and looked 10 days out to the September series and sold the 100 call, we would get 129, 130 bid-ask spread. You've got some other data here of volume, open interest, delta, and so forth. But we see here, this gives us, as a covered call, we'd have a 1.3% downside protection and a 2% return if we're assigned. Okay, well, if I wanted to be a little bit more conservative, I may go slightly more in the money. We could sell the 99 for 178. Still gives us a 1.8% downside protection for a 10-day trade and a 1.5% if assigned. And our probability is slightly higher, from 43.4% for the 100 to 53.4% for the 99. So this gives me more choices and better ways to compare which call option, which premium, and which return best match my needs for a covered call one stock at a time. For the naked put, those who are doing naked puts, the option chain, you can customize the view to see what you want. So if I'm looking at a new naked put on the chain one stock at a time, I don't want to see the downside protection. Let me change the expiration again. I don't want to see the downside protection and percent if assigned because that applies to a covered call. What I'm going to focus on is going into the Choose Columns field, briefly adjusting my columns to see the percent naked yield, my annualized naked yield, and of course maybe the time value probability, and I could select other data columns as well. So going out of the money, I can see which one is still giving me a decent premium and a decent yield for a 10-day, 7-day trade, or a 30-day trade. Of course, if I wanted to go into October for the put option to get more premium up front, we could just select the October standard expiration or any of the weeklies in between, or you could choose also to view all months to see the comparisons side by side. Now, for collars and married puts, I'd recommend using the tool that you have available is the search by symbol tool. Same functionality we saw in the Iron Condor. Just put in your stock, select your expiration date. For the collar here, you have to select the expiration date for the call or for the put. So if you wanted to do a standard collar, and I chose September versus September, we could see the numbers there. You could also customize it if you wanted to more of a calendar collar, where you want to sell the September short term that's 10 days out and maybe buy the October or buy a further out weekly, and then you can customize it to less, more, or all results as well. For those of you doing diagonal spreads in the calendar call, calendar put, same setup. You use the search by symbol tool, and then you can select your near month, whether you want to look at weeklies or standard September, for example, standard October, and then you can select your far month as well. So if I wanted to do weeklies versus the October standard expiration, we could look for possible calendar spreads against those positions as well. Lastly, for those of you doing long calls, you could use the option chain, but as I mentioned, the better tool to use is the long option finder for long calls or long puts. If I'm interested in buying a call on Apple, it's because I have a speculation of where the stock may be trading in the next 20, 30, 40, or 50 days. Oh, there we go. Sorry, folks. So what I'd want to do is in the long option finder, I'll just put in my symbol, expected price of the stock. This is not a recommendation or suggestion. This is just for example purposes. But I'm going to say I think Apple's going to be up to $102, let's say by the 25th of September. And I'm going to put maybe $1,200 or $1,500 into a long call investment. So let's go ahead and submit that. All right, in that brief moment, what this tool did is went out to the full option chain for Apple. It grabbed the current price of every option. So we see here the September 97 has a current price of $3.60, and this is the 26th of September. We could afford to buy 3 contracts based on our investment amount, so our position cost would be $10.83. It assumes about $1 per contract. But then the system ran the theoretical calculations to see what each of these options would be worth if the stock did hit our target price on or around our target date. And this September 97 call is listed first because it would give us the highest return theoretically, if the stock did hit our target price on our target date. So we don't have to go through the option chain, run our own calculations on each of the prices that are listed to see what those options will be worth. This tool does it for you. Just put in your expected price of the stock, your investment amount, and your target price, or target date. Now you may say, well, where's the September 20th series? I see the 26th September, I see the 3rd of October is the next week out. Where's the September 20th series? Well, they didn't appear because we put in a target date of 9/25. Right? So the September 20th expiration, standard expiration, would already have been passed. We wouldn't have been able to do anything. If I change my date to, let's just say, the 19th, let's run that. Okay, now what we see is the 20th September series do appear. The 99 call at 193 would give us the best bang for our buck. Of course, some of the 26th Septembers, that 97 call and the 99 call are still there as well. And of course, if you're looking at put options, same process. You'd be in the long option finder. You just put in your target price, which of course would be a lower amount than the current stock price. All right, ladies and gentlemen, let's get into the search tool. And we're going to start off with bull put credit spreads. Now, anytime you're looking to identify new positions in any given strategy, we could go directly into the search tool. And we do have default searches created for you that you can use as a stepping stone to create your own personal search. But if you're not quite sure of what you may want to use, what criteria you might want to use, in every strategy, we have sample searches that are available for you. So let's just click on that. And for the bull put credit, the theme searches we have, there's an ETF bull put search. It's looking for bull puts on ETFs, 10 to 45 days to expiration, sorted by the highest probability. There's a bull put search looking for stocks on the S&P 5-star list, those rated 5-star rating by Standard & Poor's, currently in an uptrend and at least 5% out of the money for a little bit of protection. That makes sense. And then, of course, there's the safety first one. Probably won't get a lot of premium with this one, but it's going to look at the large cap stocks over 10 billion with a high probability of expiring worthless. So let's just click on our 5-star bull put search to begin with. This will link us directly into the search tool, where we'll be able to see the listed trades that match that criteria. So we see some common names here that we'd expect: SunEdison, Delta Airlines, Gilead Sciences, Celgene Corporation, Toyota, Trinity Industries is what I've been seeing a lot recently in some of my searches as well. Now, when you first have your trading results, you don't necessarily want to go in and just take the first trade. It looks like a good position. SunEdison's at 21.08. We could sell the 20 put for 77 cents, buy the 19 put for 51. Well, this would give us a net credit of 26 cents, or roughly a 35% return on our risk investment there of, but the $2 or the $1 strike difference. I'm sorry. Oh, but there's only a 63% probability the stock would stay above this position. The 20 strike put, both puts would expire worthless, and we keep the net credit. Well, before you just jump into the first trade, the first thing you always want to do is scroll down below the listed trades. Whether you access the search directly in a given strategy or you go through the sample searches. And here in the parameter field, we see we have 4 different sections of what we can use to enter criteria to identify positions. We have our options criteria, organized by things such as the time frame, implied volatility values, risk and return values, range in or out of the money, price strike price difference, which includes screening for the bid-ask spread, percent bid-ask spread, deltas, probability, and so forth, and liquidity, looking for specific option volume or open interest to make sure you're seeing active positions. You have a variety of stock technicals. These are the same basic forms you'll see in every strategy in Power Options, but some of the options criteria might be different. For example, in covered call, we wouldn't see the fields for percent return and percent maximum risk or strike difference as we would in a bull put, but we'd have fields for downside protection, percent if unchanged, percent return if assigned, so you can customize it specifically as to what you'd want to see in that given strategy. All right, so the technicals here, different things: beta, average stock volume, relative strength index, historical volatility for the stock, broker recommendations, Bollinger Bands and Bollinger Band ranges, simple moving average. We could simply select to look for stock prices that are above or below a 20-day, 30-day, or 40-day moving average, historical trends, and MACD as well. And then in our fundamentals, we could screen specifically for things such as stock price. Probably only really applies if you're doing a covered call, a cash secured naked put, standard collar, or a married put position based on your account size. You want to limitize the stock cost. Earnings per share growth, price to earnings, dividend yield, market cap, and we can choose to avoid stocks that have an earnings between now and expiration, or stocks that have an ex-dividend date between now and expiration as well. And the last section is the lists. Inside the list, we can choose to screen against a particular sector or industry, or we can exclude a specific sector or industry. If I wanted to remove healthcare, for example, or things of that nature, we could do that also. The stock lists. Well, we've got a variety of different stock lists that you can choose to screen by if you like to follow things such as the Dow 30 Industrials, Investors Business Daily lists, the Standard & Poor's 100, S&P 5 stars, NASDAQ 100, or we can choose to exclude a specific list. I may choose to exclude leveraged ETFs if I'm using an open search, or maybe inverse ETFs as well, depending on what strategy we're looking at. In addition to that, you can create your own personal stock list. If you have a list of just 20 to 30 stocks or maybe 50 stocks you follow on a regular basis for trading spread positions or covered calls, you can create your own list, and then you can choose to screen just against those to, let's say, find the covered calls that match your returns in those stocks. All right, well, let's go back a little bit. This may seem intimidating at first. There's a lot of different criteria that you can use, but the first thing we want to see is the overall view. Over here on the right-hand side, you have the active filters, and this shows us exactly what criteria were being used for our bold put credit spread search, this theme search for that S&P, the 5-star list. So we're looking at all months to expiration, which includes weeklies, but we're forcing it to only show positions that are between 15 and 55 days out on time. We're looking for a minimum net credit of 25 cents. The maximum risk, in other words, the difference in strike prices minus the net credit for our bull puts, has to be less than 9. We want a minimum 3% return, range out of the money at least 5% for some protection. We don't have any technicals or fundamentals right now, and the main reason why is because we used that list to screen specifically against the S&P 5 stars. Well, if you saw a criteria here that you wanted to change, Let's say we wanted to look for a minimum 30-cent net credit. Well, we can just click on Edit Filter, and that will take us directly over to our screen. And let's say that we want at least 35 cents minimum net credit. Now let's go ahead and submit that, just change basic criteria. Okay, so this narrowed some of those down. Naturally, we lost our first position because we saw there was only a net credit of about 26 cents, I believe. So now we have a smaller list of only 10 results. And of course, we could continue to customize this based on what probability we wanted, and of course, what time frame. If you did want to include the standard September expirations, we saw that September 20th, we'll consider again a weekly, but it is the standard expiration, was 10 days out. So I might want to change my view here, say is there anything that's going to be in that S&P 5-star list? We're going to lower the days down to 9 to 55. But is there anything in that list that matches this criteria of a minimum 35-cent net credit with the S&P 5-star list? And unfortunately, we don't see anything. Okay, everything here is 38 days out in time. It's the standard October expiration is the only ones that match our criteria. Of course, we know when we use the weekly options, we have to give some allowances for how far out of the money we can go. You know, we're looking for a minimum 5% of the money. I have to lower that using the weekly options. If I'm looking for a reasonable return, probably also going to have to lower this minimum net credit. Okay, and we can do that. So we don't see what we want. We know we have to adjust the criteria slightly. Let's only go 2% out of the money, and let's go back to just a minimum requirement of 20 cents for our net credit. Is there anything that might be shorter term that would give us what we want? Well, we do see some. Unfortunately, you know, which ones, I'm sorry, we see some here that are down to 10 days to expiration. The standard September 20th spread on Gilead, that now matches, as of the one on 3D Systems. We have some of the ones that are 16 days out, the next weekly series in 23. But why are we still seeing a lot of the 38 ones? 38 days out, I should say, to the standard October. The reason why is because we're choosing to sort our results by highest percent return. Okay, and what are the ones that are going to have the highest return? More than likely, they're going to be ones that have the farthest to expiration to get larger premium. But if we could change the sort, if we wanted to look for lowest return to highest instead of highest to lowest, or if we wanted to change it by expiration date, select expiration date, and I'm going to change the radio button here to go lowest to highest. And see that? Let me circle that for you over here on the right. The two triangles here, this one on the far right is lowest to highest. So I want to see the closest expiration date first. Change my sort slightly. And on the first page, we have 65 total spreads now that match our default criteria that we linked from the sample searches and made some basic adjustments to. But we see now that we have most of the 10-day ones. There's probably 10 or so, 10 to 12 of our first 20 results. And we have some of the 16-day trades out, and then 23 days out in time. The 3rd of October weekly continuous series is available as well. Okay, so that's just a basic view of starting from a sample search, or there's a variety of default searches that are here for you to use as a stepping stone as well in the main search. We could have started off with weekly bull put credit spreads just to look at the 1 week or 2 weeks out that match our criteria. All right, but I had mentioned earlier, you may seem intimidated and a little maybe just anxious when you see all these different criteria that you can use and all these different settings that you can look into in a given strategy. But the key is to keep it simple. When you're first creating a strategy, let's say you want to create a strategy from scratch, a search from scratch based on what you want to see in your investment needs. If you're looking to do bull puts, you already know a few things. Okay, you have a few basic criteria. I'm just going to use the more information menu here. This is where we do our further research and analysis. We can look at the stock chart, company information. I could link to the midpoint spread chain to see other spreads using midpoint pricing. And of course, you can add it directly to the portfolio or do further research on the stock or the individual put options as well. Let me just go to the profit and loss chart. I want to take a quick view here at this bull put credit spread in Las Vegas Sands, 10 days out. And just looking at the credit spread here, the profit and loss chart, this gives me a gauge of 5 or 6 things I want to look for. I'm doing a bull put spread. What do I want to look for? Well, number one, I'm going to want to look for a bullish stock. I'm going to probably want to look for a stock that has some good earnings, reflection of good management. I maybe want to see a stock in an uptrend. I probably want to see stocks that have good average stock volume and maybe even mid to large cap stocks. Keep it in that range so I'm not seeing any small cap stocks that might tend to fluctuate more wildly. So I'm going to want to look for some basic criteria for the stock. At the same time, I know my risk tolerance and I know my return. So if I'm looking whether it's 10 days out or whether it's a standard 30 days out or whether it's over a wide time frame, as we just saw with the search we used, I know that I maybe going to receive a minimum of, let's say, 35 to 45 cents for my bull put credit spread. I may want to keep the risk under 5 points. I might not want to look at 10-point spreads or 15-point spreads on larger price stocks. Another thing here is that most spreads, of course, we're also going to look for that high probability, and we know that we want to sell a put that's a little bit out of the money to give us some protection. The probability and range out of the money go hand in hand. But in addition to that, most bull put credit spreads that have a higher probability also have, sort of a maybe 9 to 1 or 10 to 1 risk reward ratio. In order to get that 80% probability, you're probably looking at an 8 to 1, 10 to 1 risk reward tolerance. We see that here, don't we? This particular spread on Las Vegas Sands, we're taking 38 cents up front on the net credit, but our risk is a 4-point spread. It's kind of strange here. It's one of those weird ones. It's a $3.50 cent spread because they offer 50-cent weekly positions, the 57.50 and then the 61. But our maximum risk here is 312. So that's about a 9 to 1 risk-reward ratio. That's what we have to accept. Well, what does that mean? Well, it means that I'm going to want to avoid anything that has a chance of suddenly gapping down and dropping below 57.50. Can we know the future? No, but we can avoid certain things, such as earnings, that may cause a sudden overnight gap where our position looked profitable the night before. We wake up in the morning, the stock's trading at 54, our spread's now at full loss. Okay, so just with that information alone, I have enough criteria to create a decent bull put credit spread search from scratch. So now that we're in the search tool, I'm going to scroll down to our parameter field, and I'm going to hit Clear Filters. Let's start off with our stock fundamentals. We're not going to use that list anymore, the S&P 5-star list. We're going to create our own list, in a sense, by limiting our ranges. So the stock fundamentals, again, the stock price start off with, well, I'm doing a bull put credit spread. My risk is the difference in the strike prices, so I'm not concerned so much about the underlying stock price. If I was doing a covered call, and let's say I'm only trading with maybe a $50,000 or $60,000 account, I may have a requirement where I'm only looking for stocks that are less than $100 per share or less than $150, so I'm not taking too much of my capital to go into one position. Stock change today, let's not worry about. Now, I'm going to talk about some of the criteria that I use when looking for bull put credit spreads, bull call debit spreads, covered calls even, naked puts, standard collar positions, just the neutral bull strategies, calendar calls, married put positions as well. The percent earnings per share growth is just a reflection of how has the stock grown in earnings from last year to this year. And Ernie and I strongly feel, I learned from Ernie, of course, the president founder of Power Options, but we strongly feel that the earnings is what drives stock growth. So I'm going to look for stocks that have had a positive earnings per share growth, at least 5%. If I'm doing long calls, I might look for something greater, something 10% or along those lines. And I like to keep my PE ratio between 0 to 50. Okay? Now, at the same time, I had mentioned earlier that maybe I wanted to look just mid to large cap stocks. So in the market cap field, if you're not sure what number to use, just hover over the filter there. And here we see that the small cap standard range across the market is considered 0 to 2 billion, 2 to 15 billion is considered mid, and the large cap is considered 15 billion or greater. And I'm sorry, the market cap field is measured in millions. Therefore, if we wanted to look for a mid cap stock, we want to look for maybe 2,000 or greater. So mid to large cap, put in a market cap of 2,000 or greater. All right, what are the other things I wanted to do? Well, I do want to avoid stocks that have an earnings between now and the expiration date because I don't want to get stuck with a sudden gap down where all of a sudden I've lost that 10 to 1 risk-reward ratio on my bull put spread. On the stock technicals, what might we look for? Well, if you wanted to use volatility or RSI, you can put those in. If you want to use Bollinger Bands or MACD, you can use those filters as well. I'm going to keep it simple in our technicals. I'm basically just going to look for a stock that's trading above the 50-day moving average. If you're looking shorter term, you may want to look for a stock price that's above the 20-day, the SMA 20, for example. Or I know many of you might use the different combinations where you want to look for a stock where the 20-day is above the 50-day moving average, or maybe the 50 is above the 100 if you're looking for something with longer term growth as well. That's all I'm going to enter into this field. Now let's talk about the options. The first thing, my time frame. Well, we know that there are securities out there. We saw the 10 days. 2 days is probably too close for this Friday's expiration. So I'm just going to go 9 to 35 days out in time. Like for any spread that's a weekly or has an expiration date between 9 to 35 days from now. Minimum net credit, well, let's say even though I know I might see weeklies, but I don't want to see weeklies that only offer a 10-cent or 15-cent position, let's put in a minimum net credit for 35 cents. Your requirements are going to be different. If you wanted to look for just those spreads that offered $1 premium with the other criteria, just plug that in. Now, instead of using the maximum risk field that we did before, which is defined as the difference in strike prices minus the net credit, I'm going to tell the system that I'm only going to prefer to look for spreads that have a strike difference of less than 5 points. So in my strike difference field down here, we're going to keep the strike difference to be less than or equal to 5 points. Okay, so you could choose $1 or $2. You could choose it to be equal if you just want to see 1-point spreads or 2-point spreads. I'm just going to a broad range. My strike difference is less than or equal to 5. All right, now let's go back up here. Range in or out of the money. Well, I know I want to be slightly out of the money. I tend to focus more on the probability on the position. You know, if I look for a 75% probability or more on a spread, I know that I'm going to be probably at least 2 to 3% out of the money. But let's just start with 2% out of the money as a minimum requirement. And as I mentioned, I'm going to put in my probability. Again, that's the theoretical probability the stock would stay above my short put in this case, and it would expire worthless. So I'm just going to use a range of 75. Now, option volume today and open interest. I want to see some liquidity. So I'm going to tell the system I only want to see options, short or long option in my spread that trade at least 10 contracts today, and I want an open interest of at least 100. All right, before I even hit submit, we put in a list of roughly about maybe 12 to 15 filters. But was anything that we put in extremely advanced? No, in fact, what we did is we put in criteria that were relative to the structure of the trade of what we want to see in the most basic view, and things that matched our minimum requirements. We're doing a bull put spread, a bullish position, so we want stocks currently in an uptrend. I want to see stocks that reflected some decent growth, and I like to keep my PE ratio within a reasonable range. I wanted to look at mid to large cap stocks, and I wanted to avoid stocks that had an earnings between now and expiration. Put in my minimum time frame, or the time frame that I wanted to see for my spreads, my minimum requirement for return, strike difference, probability, and some liquidity. Does that seem like a very advanced search? No, it seems kind of basic. But let's go ahead and run this search, see what we get. Wow. Right now, there are only 3 total bull put credit spreads that match that criteria. We had to have a pullback recently, so it's highly possible that a lot of stocks aren't trading up above their SMA 50 after the other day of trading. And we are coming into an earnings season, so things that are potentially in that 35 to 30-day range out, those weekly options, we may be limited now because we know we have earnings coming up within this next season starting in October to November. But I can tell you honestly, because I see the numbers all the time, every 20 minutes we're essentially building close to 1 million to 1.1 million bull put and bear call credit spreads. So out of the potential close to probably 600,000, 700,000 bull put credit spreads that are being built on a regular basis, we've narrowed down the entire market to only 3 positions that match our base criteria. Now, if you wanted to open this up a little bit more, I can tell you right now the first thing that's probably hindering this from seeing more of the 10-day out trades is the net credit. We didn't go that far out of the money. We looked for a reasonable probability, but if we wanted to increase this list to see more positions there, I'd have to lower my net credit, which makes sense because using weekly options, you have to give an allotments there that you're not going to see a lot of premium that you'd expect on a 20 or 30-day trade. So let's narrow it down to 20 cents. Let's lower it down to 20 cents. Now we've opened it up to 15 trades. And, there's duplicates, of course, because there's different stocks that have the different ranges that match there. There's 3 on Google, 4 on Baidu, for example, 2 on Visa, 4 on Apple. So we could choose which one we want based on which probability and which minimum net credit best suits our personal requirements as well. What we saw, just in a basic screen, using a basic filter that defines the structure of the trade we're looking at, that you can easily narrow it down and greatly reduce your time with options research and analysis using this patented tool to just find the positions that match your requirements. Now, we had a question come in, and the question was, what if I only wanted to see 10-point spreads that offered at least a $2 net credit but still had at least a 70% probability or higher? Okay, that's simple enough to do. If you have a very strict requirement of what you want to see, well, let's just go ahead and clear the filters. Now, you didn't, Doug here, who sent that in, didn't mention a time frame. So let's keep our same time frame of 9 to 35 days. I want a minimum net credit of 2 points. I want the risk to be equal to 10, or the strike difference, I'm sorry, not the risk, but the strike difference to be equal to 10. Even if you're doing something this specific, I'm always going to suggest that you put in some liquidity for the option contracts today and the open interest. The reason why is sometimes you might see a bull put credit spread on a lower liquidity index or ETF, for example, that has not traded on it. So you can't trust the bid price and the ask price because it's never been traded. So I always put in, I have 0 open interest and 0 volume. So I always want to put in the volume and open interest to make sure I'm only seeing active traded positions. So we want to look for a minimum net credit. A strike difference is greater than 10. I'm sorry, probability of greater than 70, and some liquidity. Not even going to look at the stocks or narrow it down to stocks or indexes. We just want to see what's available. Well, I apologize. There are no spreads that are being built. Those, close to 600, 700,000 bull put credit spreads. There are no spreads right now that offer a minimum 2% net, $2 net credit on a 10-point spread, have a probability of greater than 70. Maybe we can find some further out to October. Remember, that was 38 days away. So let's increase this to 40. Let's go 9 to 45 days out. Maybe there's something out there in the far lists that we can find. There's one. How about that? The Netflix spread. Now, I'm not advocating and saying this is a good trade, but the stock's at 481. We're shown we could sell the October 450 and buy the 460. Sorry, strike that, reverse it. Sell the 460 and buy the 450. We'd get a 225 net credit for a 29% yield on roughly a risk of 775 would be the at-risk. 10-point spread, but we keep the net credit, so our margin would be 775. That gives us the 29% return. But in any strategy, if you have something that's that specific, it's very easy to just put in specifically what you want to see. A lot of times I get customers who call up and say, okay, I'd like to do a bull put spread. There's a course being taught out there now. I can't remember the name of it. But they advocate that if you're doing a bull put spread or a bear call spread, that you want the short option to have a delta of 0.3 or less, which really does equate to a probability of greater than 70 or 75%. I choose to use probability instead of the delta. But, you could do that as well. We could go ahead and clear this out. And again, I'll put in my time frame. I don't want to see every expiration month, but let's go back to 9 to 35 days. Net credit, okay, we want at least, let's say, 20 cents net credit. Not even going to be worried about the range out of the money or probability. Why? Because they all go hand in hand. If I look for a lower delta, for example, on a put spread, that means I'm further out of the money and have a higher probability. Okay. All right. So let's just talk about that. I wanted a short delta. Now this is tricky, of course, because we're in bull puts and they have a negative delta. So I'm going to see deltas of greater than negative 0.3. And again, I'll put in my liquidity. All right, so there's a lot of spreads. There's 464 spreads that match that. Minimum delta greater than negative 0.3, still offering a 20-cent net credit 9 to 35 days out in time. So now what you'd want to do, of course, is further go through the list and start customizing this. You want to narrow this down. A good number is to have is about 25 to 35, maybe 40 positions. That's how you help save that's how you help save time with your options research and analysis. All right, Alan asked an important question, and we want to get to that. But to do that first, I just got to go back to scratch. I'm going to start over and put in, I didn't save it this time, so we're going to put in our new criteria that we're using. We're 9 to 35. We want a minimum net credit of 35 cents, 2% out of the money, I believe. Excuse me there, 75% probability. Oh, and by the way, you don't have to worry about option bid, of course, if you're looking for a minimum net credit. A lot of times I'll show that, oh, you want to put in a 50-cent net credit. Okay, well, I see that, but what should my option bid be? We don't really care what the short option bid or the long option ask is. In this strategy, we're focusing on the net credit. All right, so my strike difference, we were going to say less than or equal to 5, 10, and 100. And then for technicals, just that basic view of stock greater than the SMA 50. Fundamentals, market cap was greater than 2,000, EPS growth greater than 5, PE is 0 to 50, not between now and expiration, and I believe that was it if I'm not mistaken. Okay, so let's run that search again, see if we get the same results. Good, there are 3 results. Now this is more narrowed down, Alan, but which one is the best one? Well, I can't answer that directly because every investor has their own way of evaluating which spread position is the best one. Is it one with the highest probability? Is it the one with the highest net credit? Is it the one on the stock with the greatest earnings per share growth? I don't know. But here is my process, Alan, of what I do in any strategy to identify the positions. We start with Google. We see we're doing a 575, 570 spread. We're getting a 50-cent net credit for an 11.1% return. And we've got a 79.1% probability. Now that I have my results, the first step that I do in every situation is I'm going to go into the stock chart. Oh, and these are 10 days out. That's important too. So I'm going to take a look at big charts. And the reason I like to use big charts is because, well, you can customize this based on what you want to see. For a 10-day trade, we're seeing the basic one-year snapshot. Everyone has their own way of reading charts. We're not going to get too in-depth into that. I'll go with a 3-month chart for now, and then I want to select my indicators. I want to select the SMA 20, and my upper indicators I'll use Bollinger Bands, and we can set lower indicators. Things I want to see is usually the volume, of course, but more important, I'll look at the MACD. Some of you may use stochastics. I personally don't, but you can customize that as well. So I'm going to select the MACD, the RSI, and the volume. Let's go ahead and redraw that chart there. Okay, so what you're seeing are the red lines here are the Bollinger Band envelopes. Okay, and then we're looking at the 20-day moving average as well. I've got the MACD down here. We see there's been a crossover, but it started to pinch back, and the RSI has pulled back also. What I'm really looking for here is, remember my spread, we're selling the 575 and buying the 570. What's most important to me is the 575. All right, so as I'm looking at the chart, I'm thinking to myself, here is my short option, roughly along this line here, at 575. In the past 10 days, it's dropped close to it, but then it's moved back up. It's starting to pull back below the 20-day. The last time it did that, it bounced off of it, and then here, though, it was dropped well below it recently. I might want to go back in time, go back in news, see what event that was that caused it. What I'm really looking at here is, even though the stock's still trading above the SMA 50, what I'm trying to see is this a stock, a chart that I feel comfortable that the stock will continue to stay above 575 in the next 10 days. Okay. Now, we all know Google. We know what Google does. We know that we hear news articles about it every day because everyone writes a news article about Google and Apple to get clicks because that's what everyone's clicking. But if I didn't know, for example, Baidu I know and Visa I know, but if we had a stock in here we didn't know, after I looked at the stock chart, oh, and by the way, if I saw anything in that chart that may cause me hesitation to enter the position for the strategy I'm using for bull put credit spreads, then I'm just done with Google and I'll go to Baidu. Okay, if I don't like the stock chart, I'm not researching it any further. All right, so the next thing I'll do is I want to look at the company information. I want to go to the news. Well, it sounds a little bit boring, but we got to do our due diligence. I want to see the recent news headlines. Is there anything that I might not have seen in the past 5 or 10 days that may cause me hesitation for entering the position going forward? Anything such as rumors of a pending patent lawsuit. Anything about a boardroom scandal, adjustment in the boards, anything about a recent product that came out that failed, or speculation of a product they're going to release that is kind of wavering. Those are things I want to know before I enter a position. One thing that usually gets me is if you end up looking at sort of an oil company. This got me a couple years ago. I looked at the news and I didn't go far enough back, unfortunately. Everything about the stock looked really good. It was a El Paso pipeline, I believe, and everything looked great, but there were no news articles that showed up in the first 2 months that everyone was waiting on. And the news was related to they had several fields that they had leased, several hundred, close to several thousand, a couple thousand acres of land they had leased in a field down in South America. But there was a pending ruling coming out on the South American government of exactly what kind of taxes and levies they were going to provide on that particular field, which looked like a really strong field. Well, when the news came out that they were essentially doubling the taxes and everything else, the taxes and the fees for them to lease that land, the stock dropped about 12–15% because it was assumed that the company wouldn't be able to do that and they'd pull out of the field. They ended up partnering up with someone, I think someone larger, BP for example, if memory serves correctly, to help with the lease costs, but the effect was done, the damage was done. But unfortunately, I didn't see that, so it is really beneficial to go back because you might miss something. And you can look at other things such as the profile of the stock. If I don't know the stock, I like to look at the profile. What do they do? What is their company size? Where they're located isn't going to help them or hurt them financially, but it's just always good to know your company a little bit. The next step I do after I look at the chart and I select the chart for the strategy I'm trading, I didn't see anything news that caused me hesitation. I want to go into the stock research tool. Now I can select to view the stock research tool shows me all of the data that's available for that particular stock that we have here at Power Options. Now I can choose a lot of these columns to be able to view on my search results. Anything that you can search by in the search fields, you can choose to view as a data column. But what I want to see specifically, I know we're at a 10-day out trade, I want to see specifically is this section here. When is the next earnings? I know that I removed the earnings date between now and expiration, but I also want to know when it's coming up, how that might affect the trade. We're looking at a bull put spread that expires on 9/20, right? And if the earnings are coming out on the 22nd or 23rd, it still might cause me hesitation to enter the position. It's not between now and my expiration date, but I know in the next 5 or 10 days, I may see fluctuations in the stock price and fluctuations in implied volatility as we get closer and closer to that expiration. That might help my trade or it might hinder my trade. That's something I want to know. 10/16 might be far enough away where it won't matter, but I have some of those other details, the earnings per share growth, the current percent trading range of the stock. You want to look at RSI. The broker recommendations and the changes in recommendations, for example, the last earnings and the last earnings surprise, it's all there for you. Right? So a little bit more due diligence there, looking at the stock research tool. All right, so lastly, didn't see anything there that might cause me hesitation. So we looked at the chart, company information. I looked at the, the research tool. When doing a spread, I may now look at the midpoint spread chain. And the midpoint spread chain, of course, this is just, well, there's none there. So none using that criteria we use of the 2-point strike difference, the last save screen that we use. But I could adjust this and see if there's other spreads. But we know that if there were other spreads, they would have come up in our results. The last step I always do, Alan, in my process, now that I found my results, is I'm going to go to the profit and loss chart. Sounds basic, but what am I doing here? I'm looking at the basic risk-reward profile for my position. I know I kept it to a 5-point spread. See a little bit here graphically, what is the range out of the money, what is my distance to where I'm going to be in trouble on this position, and of course I've got my limited net credit 50 cents here for my risk of 450, the standard thing I expect to see about those numbers, looking for a probability of 75 or 80% or greater going out in time. But what I'd like to do here in most strategies is I specifically want to see what would happen if I was wrong. We know our expiration date's on the 20th, and it's showing me the gain loss here, the curved red line is showing me the gain loss on 9/16. That's the halfway point between today and the expiration date on 9/20. But what if I'm conservative? What would happen if the stock did drop down to, let's say, 576, just 1 point away from my short put strike price in the next 5 or 6 days? So I'll go ahead and hit calculate. Okay, we know the max risk was 450. What I'm looking at here is if the stock was trading at 576, it dropped down here from its current price of 590 6 days from now. Well, in theory, my 575 put would increase from 190 to 423, so that would give me a loss of 233 on the short put. My long put would gain a little bit, though, so I could sell that for an 89-cent gain, so I'd have an unrealized loss of 144, theoretically, if I liquidated that position. Right, so I'm just running my what-if scenarios. Am I comfortable with if it goes opposite? What if it goes mid-range between and it drops down to 572.50, midway between my strike prices? 6 days from now, well, the risk would be 201, pretty much close to about 45–50% of my maximum risk. So I may have to take that into account, basing it on what would happen. So it just allows you to run some basic what-if scenarios and see it graphically. That's always the last step I do before entering the trade. I want to run what we call the catastrophe report and what-if scenarios to make sure I'm still comfortable in the worst case or secondary worst case of that happening. Lastly, if that's the trade that I wanted, and everything matched out, and I decided this is a trade. Well, if you're using Options Express, we do have a broker link here in Power Options, so you can just use the broker link to go into bull put credit spread or leg into the position. But if you don't have, or you're not using Options Express, that's fine. Log on to your brokerage account, place your trade, put in your limit order for the minimum net credit or maybe a little bit higher if you see a wide range in the bid-ask spread. And lastly, what we're going to do is we're going to come back to Power Options, and I'm going to select Add to Portfolio. And let's see, we already have some here. I'm going to put it in this Trade Monster account. You know, you can create your own portfolios. If this is the first time you're linking to the portfolio to add to portfolio from a search or search by symbol, you'll only have that top choice there. And you could call it paper trading portfolio. You could call it, you know, my Trade Monster account or Fidelity or however you wanted to name it. Or you could just call it bull put spreads if you're just tracking your positions by strategy. Let's go ahead and put this in the Trade Monster account. And it gives me the information that we had. Okay, so we're selling the 575 for 190 as the natural bid and buying the 570 at 140. Let's say we got a little bit better fill. We got this at 195 and we bought this at 138. Okay, so we got a little better spread there, 7 extra cents. Now I just have to put in my number of contracts for the trade. Transaction date was recorded, but if this is a historical trade, I could put in an older date and commission fees. Let me just put this in as a commission fee of 0. Okay. All right, now I got my information. Oh, Steve asks, can you change names of your portfolios? Absolutely. Let me go ahead and add this new position in. I'm going to walk through one step first, Steve, and then we'll link over and I'll show you how to change the names. So here are some positions that we've put in from other examples, just a long stock on Avis that we've been rolling and adjusting. The original price is $58.50. We've got it down to $56.59. Johnson & Johnson married put. And here is our bull put spreads. So it shows me the prices of the individual legs, the current price, and the change today. And then I've added the field here. Sorry, folks. There we go. I've added the field here to view position analysis. And what this allows me to see is what is my original position cost? Well, the negative 570, that was the net credit I received on the bull put. My original expected return? Well, if everything works out, I keep the 570. We have a 12.9% gain on our position. Right now, if we close the position, we'd have a loss of 130. That's just due to the bid-ask spread. And, of course, the maximum expiration return. What the expiration gain or loss, shows you is if the stock's trading at the same price it is right now, what would your expiration? In this case, if the stock stayed at the 590, to expiration 10 days away, both options would expire once we keep the net credit. Now that I have the position in my profit and loss portfolio, the next step I want to do is the alerts. You see here I have an alert triggered on CAR. Shows me it's alerted in red. So if I click on View in this portfolio, stock limit has dropped below $60.50. I'm sorry, the stock's above $60.50. I had set that an alert when I had sold a 60 strike call, and this paper trade was listed as a covered call. Now I can take that off because I don't have a covered call. So I'll just go ahead and save that and reset the alerts. Okay, so now I have no alerts. But we just entered my bull put credit spread. So let me go into the view here. And what might I use for a alert on my bull put? Well, we entered the 575, 570 spread. So, you know, leg 1 is the 570, leg 2 is the 575. But for things such as this upper stock limit and stock percent change, doesn't matter which one. So for my upper stock limit, or lower stock limit, I should say, my apologies, is I sold the 575, so I probably want to be set an alert if the stock drops down to 576. You might even want to go higher. You might want to go to 578. I'm going to mark that as a red alert, okay, because that's a warning that it's getting too close to my short put strike price. If I wanted to put in ranges for if my option decreases 5 or 10% or increases 5 or 10% for the short option, or my time value goes to a certain level, you can set that as well. Now, I'm going to set 2 days to expiration. I find this useful when I have multiple strategies I'm tracking in a portfolio. So if I have 5 covered calls that actually have a standard October expiration, or in this case September, but I have a couple collars that expire in October, I've got a couple weekly trades. If I have 10 or 15 positions that have different expiration dates, I'll select to view the days to expiration and see when I'm at least in 2 days in expiration. So when I go into the portfolio, I see which ones quickly I have to go ahead and maybe consider adjusting or considering managing before the next day or two to expiration. Position percent change, and now we can set the fundamentals or technicals. And what kind of technicals would I set here for my bull put? Remember in the search criteria what I used. is I was looking for stocks that were trading above their 50-day moving average. So I'm probably going to be notified if the stock drops below the SMA 50, and that's going to be a warning. It changes. We knew we selected a stock that a short-term spread where the earnings are not going to be between now and expiration. But if you're doing a covered call that's 30 days out, a collar, naked put, married put trade, standard collar, or a longer-term long call, you're probably only going to be notified if you're within 3 to 5 days to earnings. Okay, you can mark that as a red or a green. And days until ex-dividend date. Those of you doing covered calls on dividend-paying stocks, I always want to be notified if I'm within 3 or 5 days to the ex-dividend because the stock's hovering right at my strike price, and I don't want to risk being assigned early because I want to stay in the stock long term. I'm going to set that as well. And of course, if you want to be notified if the stock hits a new 52-week high or 52-week low, you can set that as well. Let's go ahead and save those alerts. And of course, nothing's going to be triggered because we just opened the position. But now we see we've got our lower stock limit here at 578. Stock's still hovering at around 590.94. And when alert's triggered, we'll see it here in the portfolio. And Power Options subscribers, of course, you'll have a choice here to have your alerts emailed to you when they're triggered. So those of you that are subscribers to Power Options, once you set your alerts, you can check a box to have them emailed to you directly. Okay? All right. So that's essentially it. Oh, Steve, my apologies. Now that we're in the portfolio, if I rolled this position or I closed this put and bought another put further out in time, or I'm following a covered call and I buy to close this call and sell to open a new one, well, I won't see my old call here anymore. Once you close a leg or you roll a leg in the profit and loss portfolio where we track our open positions, the closed positions will only appear in the historical reports or in the analysis. I like the analysis view because it arranges everything by stock symbol so I can see where I stand as a whole between my closed positions and the current open positions that are listed in red as well. But Steve, you had mentioned, can I edit these? Absolutely. In the setup field, this is where you can just create new portfolios on the fly. If you want to start naming different portfolios, you can edit your cash on hand or your starting basis. You can change the date, but I can change the name at any time. So TradeMonster X7239, whoops, I entered the account wrong. It was actually X7293. This is not a real account number at TradeMonster. I have no idea what numbers they use, but just an example. So I just need to change that to, let's say, 29315. I entered it incorrectly. So I'll just click in there, change the portfolio name, save all changes. Now we go back to profit and loss portfolios. And TradeMonster X729315. So now we've got the correct name in there as well. Sorry it took so long for something simple. See, I just wanted to keep with the same train of thought on setting the alerts beforehand. All right. Well, we didn't get a chance to delve into the other strategies. We are 15 minutes past the hour. So I think we're going to wrap up today. If anyone has last-minute questions, however, I want to send those to me. We may be able to look at a quick views on the search functionality if there's any direct questions that come in. But remember, the basic tips on the search tool, you can use the default search or the sample searches as a stepping stone to create your own personal search. And just adjust one or two criteria there, open some other criteria up by lowering the minimum or maximum values or increase them if you want to lower your results. I always shoot for a good, manageable list of maybe 35 to 45 different positions to help me save time with my research. When creating your own search, click Clear these settings, but remember to keep it simple. Do not feel that you have to use every available criteria for the options, the technicals, or the fundamentals. If I put everything into each one of those blocks, I'd have no results that match my criteria. Start with just those settings that you know. Okay, so when we're talking about a particular strategy, just use the settings that apply to that strategy, whether you're bullish or bearish. Do you want to see good earnings? What is your strike difference range? What is your minimum requirement? For those positions that require stock purchase, make sure you put in your limitation of what you can afford to buy. There's no point in looking at covered call opportunities on stocks at $500 if you can only typically afford to keep your account with $150 stocks, for example. So make sure you're filtering it down. And it never hurts to further research the others. Don't get me wrong. I want to make sure, and we're going to help you here, make sure through other webinars and other presentations, make sure you're more comfortable with some of the other criteria that are used by investors and how they work in conjunction with one another. It never hurts to further research, but to start, keep it simple. Start with the basic criteria for your strategy. Now, let's say I put in that bull put screen that we started. Remember, we only had 3 results. Let's say I had 300. Well, okay. Well, now I just kind of want to change other criteria to help further narrow the results. What are some of the things I might do? Well, some of the things I might do is if I was comfortable with a 35-cent net credit and I had 300 results with a 75% probability, you know what? I'm going to be more comfortable also with a 50-cent net credit and a 75% probability. So we'll up those a little bit, right? Increase or decrease your specific ranges to narrow your results. Hit the submit button each time you change one or two criteria. You don't want to adjust 5 criteria, hit submit, and suddenly you find that you have no results. All right, because now you don't know which criteria really filtered them down too much. So you want to go back, just do 1 or 2 at a time, hit the submit button, see your 300 results drop down to 90, then the 90 drop down to 70, and the 70 drop down to 30, okay, to make sure which ones are greatly affecting your results the most. Something I didn't touch on, but if you wanted to screen for just dividend-paying stocks, start with no list to open up the entire list, use the fundamental criteria that apply to you, and then just use the % dividend yield. You want to leave that open a little bit more. The reason I mention that is I've noticed that for some of the screens I use for the married puts, in the IBD 50 and the IBD CanSlim list, if I use a % dividend yield, it usually filters out most of the good results because there's not a lot of IBD stocks that pay at least a 3% dividend. So I have to open that list up more, look for positions of the radioactive trading techniques if I want stocks that pay a dividend as well. All right, well, I didn't see any other questions come in right now. I just want to remind everyone about the subscription service, the 20-minute delayed service to Power Options, which gives you access to all of the search and analysis tools in our 23 different strategies, plus the portfolio tool and various other tools we didn't see today. That's only $60 per month. You can upgrade the 20-minute delayed to take advantage of our backtesting tools, the historical suite of tools. That's only $40 more. It's $100 per month. And we do, of course, offer a real-time service where every time you submit a search, refresh the page, or refresh your portfolio, you're seeing the numbers and the calculations at that very instant, and that's $100 per month as well. All right, well, ladies and gentlemen, thank you for joining me today. If you do think of any questions later on, just send me an email to support@poweropt.com. And, of course, we also have other webinars during the week that you want to make sure you check out. Friday at 4:30 p.m. Eastern Time, we're going to have that open forum, open discussion presentation where I don't have any planned material. You can just bring your questions, and we'll answer them on the fly. So make sure you check us out for that. And, of course, you can also call us during market hours. You can reach us toll-free at 877-992-7971. Or if you're outside the U.S., you can reach us at 302-992-7971. Of course, there's contact links at the bottom of every Power Options page. Well, thank you again, ladies and gentlemen. I hope you all have a fantastic afternoon and the remainder of your week. We'll see you soon. Good night.